All right, bear with me here. This is an extremely detailed analysis of Bitcoin and what is likely going to happen next. Right now, there is a huge case for 98,000. Okay, so a price point of 95 to 98,000 is on the table right now. In another case, there is the potential for price to go to 74,000. So in this video, I want to give you both cases. And please, if I can just have your time and attention, I want to explain to you how they're going to happen and how price will likely just continue to go beyond all-time high. But first, this is a time of retracement. This is a time of pullback, and I want to explain that. All right. In my last video, I said that Bitcoin would go to 120,000 and then melt up to 150. Obviously, only part of that happened. Okay, so we hit 124,000, and then we're seeing this really nice sell-off happen right in front of us. Now, this sell-off looks like it's crazy, right? But I'm going to show you one that happened just recently that was even more absurd, and why you should use that as a reminder of how resilient price has been and the fact that we're going to be going much, much higher. First off, let me show you that clip. Here's me saying that in the video. Yeah, so next target is 120. That's the next target. And I would argue that we'll probably shoot through 120 and go straight for 150,000. What's interesting is we still have a whole 6 months left in this year. And all of these nation states, treasury companies, governments, they're just going to keep taking Bitcoin off the table. And by the time you realize, oh crap, that's what they're doing, like that, they're all just going to force price to go up, it'll be too late. Right? It'll just be too late. All right, so again, it's no surprise, we all know we've hit 124,000 and we've been retracing ever since. So I'm going to remove this right here and we're going to jump right into this analysis. So the very first thing I want to start with is on the 12-month chart. This is the yearly chart of Bitcoin. Okay, I want to explain some things to you and explain that it's very possible how we're going to go into $74,000. All right, take a look at how Bitcoin has moved since being on the yearly chart. If you look here, we had price expand. All right, we were down here $14-15, expanded all the way up to $1,300. In the process of that expansion in 2014, we formed a buy side imbalance. Okay, just bear with me here, just hear me out. All right, we tapped into that buy side imbalance January 2015. During that year 2015, we tapped into it and the candle closed outside of that imbalance. Shortly after, in the following year, we had 2 years of expansion, 2016, 2017. Okay, the next time we had a pullback was in 2018. At the close of 2018, we formed a new buy side imbalance, but something different happened this time. Instead of actually tapping into this area, price just expanded higher for another 2 years. So after forming that imbalance, we had an inside bar, right? You can see the high and low of 2019 is within the high and low of 2018. From there, we had 2 years of expansion, 2020, 2021. All right. Now look what happened on 2021. We also formed a new buy side imbalance here, and you can see it's noted by the gray box. In 2022, price pulled back into that area, closed inside of the imbalance, and then the following year, 2023, we started our 2-year expansion. Here we are in 2025. All right. Obviously, this is still an open candle. We've got 4 months left here, but I want to illustrate to you how fair Bitcoin has been, because it's going to be very important when it comes to the future price action. Okay, what we're looking at right now is a potential for Bitcoin to create a new 1-year imbalance right here. This is the potential because, as I said, we still have 4 months left in this year. We need this candle to close in order to have a confirmed buy side imbalance, just like these, right? This imbalance was confirmed on the close of 2021. This imbalance was confirmed on the close of 2018. And this one down here was confirmed on the close of 2014. If we speculate that this right here, the low of 2025, will be the same low at the close of 2025, then we're met with 2 opportunities, okay? So here's what I mean. It doesn't matter where price moves right now. Let's just pretend that our current low will be our yearly close. Okay, so at December 31st, midnight, whatever time rolls over to the new year, this right here, this black line, marks our close of 2025. Hey, this is Sam here. I'm editing this video in real time, and what I want you to know is not to be confusing. What I mean by the low is our current low. Okay, so the current low of 2025 right now, I am anticipating that that price will not be different by the time we get to December. I am expecting the low of 2025 for that year to be the exact same as it is right now. So it's around that $74,000 and some change. Okay, just to confirm, I didn't want to confuse you there. I am anticipating at the end of 2025, when we go into 2026, the low for 2025 will still be $74,000 and some change. Just wanted to throw that in there. One of two things will happen. One, wherever price closed at, let's say we could close at, say, $1.40. Wherever price closed at, price may return back into this imbalance. And what that means is in 2026, we would have to come below the low of 2025 in order to enter that imbalance. This would be the first case for 74 grand. In order to get below the low of 2025, we have to go below 74 grand. So price could reach as low as 74 and bounce. It could go as low as 60, 63. It could fill this entire area at 44. Whatever it takes for us to get below previous year's low to access that liquidity pool would get us that test. All right. Now, why could that be the case? Because it's happened 2 times before. Again, as you can see right here, it happened in 2022. We reached down, came back up. I'll get to that in a minute. And then it happened back here in 2014. Okay. Came down, pulled back up. Right? But if you notice, it did not happen here. It did not happen in 2019. See that? We left this imbalance open and continued the expansion. That is the other case where we leave this potential area open. All right. Again, I'm going to dive a little deeper into that, but here's what I want you to understand. It does not matter if price is dropping from 124 to 109 or 110 grand right now. The bigger picture trend is still in play, okay? Right now, our imbalances and down close candles are supporting price. What do I mean? Inside of an uptrend, you have a hierarchy. All right, this is the same with the downtrend, but I'm going to explain the uptrend. In a hierarchy, in an uptrend, you have imbalances as support, and then underneath the imbalance, you have order blocks. Okay, so take a look. You have the imbalance here, right? This was formed in January 2014. It is your first line of defense as support. And then underneath that, you have this down close candle as your order block. Same thing up here. You have an imbalance here. In this case, you have 2. This is a small one right here, but I'm focused on the larger one. You have an imbalance here. And then right below that, you have an order block, which means price could pull back into this imbalance. And if it failed the imbalance, the next line of defense would be the order block. So it could pull back down into the range of that down close candle and still be bullish. Can still push out of here and go higher. Okay. That's similar to what happened in our last pullback from the yearly time frame. If you look right here, we have an imbalance here. And then right below that, we have the order block. So what price did, it pulled back into the imbalance. But as you can see, it came right into the wick of that down close candle. So in an uptrend, your down close candles will play as support as well as your imbalances. It's just that the imbalance is normally the one that's engaged first. All right. So when we're talking about the potential of this year closing as is, right? This candle may have a larger body on it to the upside. Like I said, we may close at $1.40, $1.30, $1.50. We may even close where we are right now at 111,000. Doesn't matter. What I'm looking at right now is for the current low to remain the low at the end of the year. I don't want to see this get lower. I don't want to see this candle form a new low. I preferably want to see it stay right where it's at, because what that means is it will be a shorter distance for the 2026 candle to reach down and tap into this gap. Let me explain. Take a look at the very first test, right? This third candle, because every imbalance is formed by 3 candles. You have your first one here. The middle one forms the gap. The third one closes. All right. So that's where you get your gap from. Okay. But the close of the third candle is very important. Take a look at this. This is a down closed candle. Okay. It's a bearish candle, which means if price opens near the close of the previous candle, it has a shorter distance to reach into that gap. Take a look. We opened here, up here, at $732. Price came all the way down and closed at $321. But the distance in between the close and the gap is very short. So it's easy for price to offer fair value to this liquidity pool. It's easy for price to open here, drop down just to get below the previous candle's low, tap into that area of liquidity, and continue higher. Again, take a look at what happened here in 2018. We have that first candle. The second candle forms the gap itself. The third candle closes near the imbalance. So there is a small area that price has to travel to get underneath this previous candle's low. But look at what happened. Instead of just tapping into this area of liquidity, from the close of 2018 to the low of 2018. Instead of just tapping that little bitty area, price instead goes higher. This to me shows how much strength there was in the market, because it was very, very easy for price to just reach in there, offer fair value, go higher. This is very interesting to me as to why price didn't. And this is not on a Bitfinex feed, right? I've checked this across every single market that allows me to see back to 2018. None of them go below the low of 2018. So this was a deliberate move where strength just triumphed the need to seek liquidity, okay? But here, it was different. Take a look at the third candle. It closed bullish. It closed higher and further away from where price needs to go in order to tap into that area. So we opened here at 29,000. We made a high of 69,000, but we closed at 46 grand. Think about that pullback, okay? A high of 69,000 to a close of 46,000. Then the very next candle had to travel all the way down below $16,000 just to access that yearly imbalance. This was a massive sell-off from a high of 69 down to a low of 16 grand. Look at what happened inside of this imbalance. We closed inside of this gap. The very next year, we opened near where we closed. And then in 2023, we closed outside of this imbalance, giving us that first year of expansion, and then 2024 being our second year of expansion, okay? So what I want you to understand is when price actually chooses to offer fair value in these areas of liquidity, the higher the time frame, the less variety there is inside of that imbalance. The lower the time frame, the more noise and nonsense you'll see price do inside of these imbalances. Here's what I mean. On a yearly chart, when price tapped into this gap for the first time in 2015, as you can see, it offered fair value and came out of the gap during the same year, during the same candle. We closed outside of that imbalance, and then we got our 2 years of expansion, okay? So in this instance, this is a sign of an extremely strong support where price just couldn't even stay here for a whole year. It just tapped in there, offered fair value, closed outside, gave us our expansion. But if you take a look over here, it was a bit of a variation. Price reaches from, remember, the open, 46 grand, and it digs deep inside of this imbalance down to 16 grand. But here's where a little bit of variety happens. It closes inside the gap. Now, if you're looking at this in real time, it can look scary, but this is not a sign of a failed imbalance, meaning it's failing to hold support. No. It's just a variation of what can happen on a higher time frame. Take a look at what happens on the very next candle. On the very next candle, we open near our previous candle's close, but look, there's no lower wick. One thing I watch for is to see if the new candle can even take out the previous candle's low, that wick low of 2022. It doesn't. Instead, we just open and start pushing higher. Now, of course, there's volatility in here, right? Up and down, up and down, up and down. But we don't even take out the previous candle's low. We continue to move higher until price has now gone outside of that 1 year area. Closing outside of an imbalance, a buy-side imbalance, is extremely bullish. This was our first year of expansion after offering fair value. Then, as you guys know, we got our second year, okay? You're gonna see how relevant this is as I go down in time frames. But just from a 1 year perspective, like I say, the higher time frames, you only get so many things that can happen inside of an imbalance, all right? You might get 2 candles that are inside, you might get 1 candle that's inside, such as here, or you might not get a test at all and you just get that expansion. What we're looking at right now is the possibility of one of those things happening at the close of 2025. 2025. Either we're going to leave this imbalance here open, or we're going to do another test. And a test means we have to go below the low of 2025. If this remains our low, right, at the close of the year, we would have to get below 75 grand. If we go below that, your top news channels, Peter Schiff is going to be doing backflips. Your top crypto channels will be saying that this is the bear market. It's not the bear market. That's not true. It is a needed, in my opinion, it's needed for price to offer fair value to this so that we maintain balance. Okay. Now, on the surface, you may think that this is the bull case, right? This is the bull case where we form a gap and then we just keep going higher. We don't even reach down and test it. Ideally, in my opinion, I prefer to see what happened in 2015 and 2022. I prefer to see price actually go down and offer fair value so that the order pairing can happen between institutions, so that those institutions can fill those massive buy orders and actually get into the market without causing such a massive spike. It allows us to accumulate more Bitcoin, and then we all can kind of ride that wave, right? I don't like this. This makes me very, very nervous because these areas serve as magnets, guys. So the higher you go away from a magnet that hasn't been hit, it makes it seem like, okay, price could still come back down to it. Now, the reason why I don't think that's going to happen here is because we've already kind of reset the market here, right? This was already filled in at 20,000. So the internet would have to be turned off to revisit 3 grand. That's all I'm going to say. Very, very, very bad things in the entire world would have to happen for price to come back to 3K. It's not impossible, but I'm just saying things would have to happen. But we've already reloaded the gun here. I want to see us reload again. If we reload again, then we're smooth sailing. We're smooth sailing for higher prices, guys. If we leave it open and we just push higher, yeah, that's cool and all, but it's kind of like you got to look over your shoulder type of thing. Like, yeah, this is great and all, but man, that 74K gap, it kind of makes me, I don't feel free and clear yet. If we leave this open, then we need to see price eventually make a whole new imbalance and test that one. If we don't want to see 3 grand again, then we need price to rebalance something at 20 grand. Okay. So if you don't want to see 74 grand again, price is going to have to go higher and rebalance around 180 or 140. So either way, they're all bull cases, but they're bull cases in a sense where your buy entries are going to fluctuate greatly, right? Do you want a lower buy entry or a higher buy entry? Ideally, we all want a lower buy entry. That's why I want to see, I would be happy to see 74K, because if we go to 74K, we'll likely hit 69, and that's just more and more buying that I can do. More and more buying that you guys know everybody's going to do. We've passed the point of letting buy opportunities get away from us now because of what happened here in 2021. All right, making a high of 69 grand only to close at 46 grand. Come on, man. You're talking about a whole year seeing 69 grand only to close at the end of December at 46 grand, only to see the very following year crash from 46 grand to 15 grand, 16 to be exact. That's ridiculous, guys. This was a horror moment for all of crypto. And then the following year, it's like it never happened. We close and it's like, oh, we're back. 2024, oh, new high. Oh, wow, new high of 108,000 after going from 69,000 to 15,000. What's happening right now, it should make you laugh, bro. Like 124 grand to 110. Are you serious? Thus far, nothing beats this. Like, that's crazy. And then when you zoom out, you can actually see that price was just doing that move in order to offer fair value, right? To offer fair value, reload the cargo and go higher. Let's go to the 6-month chart. I want to show you this. So now you can see on the 6-month chart, our down close candles represent price going into our 1-year imbalances. Okay, and you can see this one is open because that's the area where price left it open. And you can see this one is where those 2 6-month candles, okay, we're on the 6-month chart, are testing our 1-year area. Let's take a look at how this works. From our last down close candle, we had how many candles of expansion? Take a look. 1, I'm gonna put an arrow here. 1, 2, 3, 4. And then we had the pullback into that yearly gap. Okay, after the pullback happened, how many candles of expansion did we get? 1, 2, 3, 4, 5. Then we had a little bit of a consolidation. So because we didn't tap into this gap, I'm just going to focus on the expansion candles. which start in January of 2020. All right. So how many did we get? Let's zoom in. 1, 2, 3, 4. Then we had two candles of a pullback. You can see that's us pulling back into this yearly imbalance. Okay. So 6 months here, 6 months here. Then what did we get? 1, 2, 3, 4, 5. All right. 5 candles of expansion. This candle is still open. I'm not worried about that because this candle could turn into a bearish candle. I'm not saying it will. I'm just counting exactly what has happened and what is closed. Okay. Now, as you can see, there is a pattern of expansion on the 6-month chart. All right. Down here, we had a pattern of 1, 2, 3, 4 candles of expansion, pullback. Then we had 1, 2, 3, 4, 5 candles of expansion, pullback. Then we had 1, 2, 3, 4 candles of expansion, pullback. Then we had 1, 2, 3, 4, 5 candles of expansion. Are we going to get a pullback? I don't know. Okay, I don't know. But here's where we go a little deeper. Take a look at this. Okay, starting with our first candle, our first bullish candle. Remember, these are 6-month increments. Each candle is worth 6 months. Look, this 6-month candle, the high was taken out by the next bullish candle, right? You can see this candle takes out the high of this one, but it fails to take out the low. Fails to take out the low. That's bullish. Take a look. This long candle right here takes out the high of the previous candle, obviously, but it fails to wick down and take out the previous low. Okay, this candle right here, our last candle in this run up, takes out the high of the previous candle, but fails to take out the low of the previous candle. In other words, we have ascending lows each new candle of our expansion. Let's see if that continues. Here's the one where we had 5 candles of expansion. We take out the high, fail to take out the low. Take out the high, fail to take out the low. We take out the high, fail to take out the low. Ascending lows on every single 6-month increment. Okay, interesting. All right, let's keep going. We know that this is consolidation, but during the expansion phase, we take out the high, fail to take out the low, take out the high, fail to take out the low, take out the high, right? And just to be sure, the high of this candle was 64,895. The high of the next one was 69,000 on the dot. We fail to take out the low. Ascending lows. Then we get our pullback, 6 months of pullback, 6 months of pullback, 1 year of a pullback. Then we get, look at this, expansion, taking out the highs. Expansion, taking out the highs. Expansion, taking out the highs. Now look, the high of July 2024, the beginning of the second half of the year in 2024, we made a high of 108,364. But in January, the first half of that year, the high was 73,794. So again, we're taking out the high. And here, January 2025, the high was 112. Even though it looks like it's the same, it's not. This candle has already taken out the high of our previous 6-month period. So every time we get these yearly pullbacks, we go on to do 2 years of expansion. 6 months, 1 year, 6 months, 2 years, 6 months, right? 6 months, 1 year, 6 months, 2 years. Okay. 6 months, 1 year, 6 months, 2 years, 6 months, right? So this, of course, some of those runs had 5 candles, right? But the other ones had 4. 6 months, 1 year, 6 months, 2 years, and then the pullback happens, okay? If that's the case, could we be looking at a period where it's time for a little bit of a cool off? Not saying that it's time for a all-out crash, war, bear market, here we go, it's over, let's sell. No. What if it's just time for a cool off? If I go back up to the 12-month, now we can kind of see what to expect. If this becomes a 1-year imbalance, then we can expect one of 2 things to happen. We'll pull back to offer fair value for anywhere between 6 months to a year. But after that, you can anticipate 2 years of expansion. 2 years of expansion where each 6-month period fails to take out the low of the previous 6 months. What am I saying? If that happens, you better not be trying to fade this. You better not be trying to fade this. You should be buying. That's scenario 1. Scenario 2 is we get this. We form the imbalance, but we fail to test it, but the same is still true. We got 2 years worth of expansion. 2 years worth of expansion. You see how if either one happens, we still expand beyond the previous swing high. That's what these lines are for. Price going above the previous swing highs. Price going above the previous swing high. Isn't that crazy? Even if price goes down here to 74 grand, our trend thus far since 2011 has shown that we will get 2 years of expansion, but not just any expansion. It's like a programmed expansion. Why has none of these 6-month candles wicked below the previous candle low? Why? That's crazy. So that's your first case for 74 grand. If we pull back to 74 grand, you should be buying. Okay. Now, when I said 98 grand, where did that come from? Like, well, what if it doesn't go down there and it does stay open? Where can I buy next? Let me show you. If I go down to the 6 month, we know that. All right, we went over that. I'm gonna go down to the 3 month. The 3 month has been looking really good thus far. Let me zoom in. Let me show you that. We've had very similar price action from the 3 month time frame. All right, we had this down close candle form a new buy side imbalance. We reached into it in a single 3 month period. In the quarter of 1 year, the quarter of July, we tapped into it, closed outside of it, got an expansion. We did it again. We formed a down close candle that gave us a new imbalance. In the quarter of April this year, we tapped into it, and on the same candle, got the expansion higher, right? So as you can see, there is no more gaps here on the 3 month time frame. Okay, that's cool. If I drop down to the monthly, this is where 98,000 comes from. Right now on the monthly time frame, we have this solo monthly imbalance that has not been tested yet. Now, to me, this is a large drop from 109 to 98, but it fails to compare to the 69,000 to 15,000. Remember that? Okay. But this would be the ultimate buying opportunity if price didn't go into that 74,000 yearly imbalance. Okay. So this low right here, down here, represents the low of 2025 right now. Meaning if we let this stay for the next 4 months, this will become the 1 year imbalance. Now, price is likely going to come down here and hold. Okay. So what I'm thinking is going to happen is price is going to come down here, test this imbalance to offer fair value. In the process, it'll also be going into this order block here to the left. And then we could expect 2 years of expansion through those 6 month increments that I showed you earlier. Okay. But if things were to get ugly and price decided to come down here at the end of the year and tap into that 1 year imbalance, then you can still expect 2 years of expansion. See how that works? Either way, you can anticipate those 2 years of expansion. But right now, if our yearly trend continues, I would expect this to be the time we expect a good pullback. Isn't that weird how it just coincidentally goes with all these whale wallets that are selling and BlackRock that's selling? Yet it's like as if it was meant to happen around this time where we've got all these all-time highs, yet the chart is showing us that we're due for a pullback. Once that pullback is over, right? Anywhere between 6 months to a year. I know it sucks. Oh man, you're telling me 6 months to a year, another pullback, man. It's going to come whether you want it to or not. Don't wish for that to be over quickly. This is your time to get in at some great prices. If it comes back down to 98, you should be buying. If 98 doesn't hold and it continues to go after the low of 2025, you should be buying. Because once that pullback is over, you can anticipate 6 month increments of 2 years of expansion. Okay, hopping down to the weekly. This is why I was looking for price to go higher during my last video. And since then, it's happened again. So this will be the last point I make, and then I'll close this video out. At the time of that video, we had this weekly imbalance marked out by these black solid lines. It was tapped into, but we just missed the external range liquidity, which is this high here. Instead, price goes back down into the gap, takes out the previous swing low, and then turns around. Look at the candle bodies, how they sit on top of that gap. It turns around, goes up, and then we finally hit that gap. Okay, so just like that. There's our expansion. Okay. Since then, we did it again. Take a look. Price formed a new imbalance. And let me show you how this happened. This is a new weekly imbalance that we recently had. Now, this is what I mean by variation. Remember, the lower the time frame, the more variation and nonsense you'll see price do. The higher the time frame, the more clear and fewer variation price can do. Look, on the weekly, price reaches into this gap for the first time on the week of July 21st. That's our first test. And look at what happens. We close outside of the gap. This looks great for follow through higher, right? But instead of going after that high, we ended up opening near where we closed at in the previous week. We opened and went right back down into that imbalance. And this time we closed in that gap. So at first, it looks like this gap may be failing. It doesn't mean it's failing. It just may be failing. The following week, we open right where we closed. We open. And now look, take a look at the lows. We do go lower at the beginning of the week, but we fail to take out the previous week's low. Instead, we come back above the opening price, turn this candle green, and then boom, we close outside of the gap. So remember, a close outside of a buy side imbalance is bullish, just like here. But in this case, the variation was this swing low. So look at this. You have a low here, a lower low here, and a lesser low here. So it forms like the bottom of a diamond, right? So it looks like this. This is a swing low. So you have a swing low inside of an area of liquidity, and you have your third candle closing above that. If that's the case, then the next candle should be the one that hits external range liquidity. Okay, so if I just go to the next candle, you see open there, and sure enough, we hit that previous swing high, and that's where we are seeing that sell-off right now. Okay, so it's nothing to be crazy about. That was bound to happen. We took out external range liquidity, and that warranted a reversal. Now, since we closed above the lowest point inside of that imbalance, let me just draw that out with the line. And I said we closed above. No, we closed below the lowest point in that gap. All right, so this is not a close below, this is just a wick below. The next candle is the one that closed below this low. Let me just show you that. So we have the lowest point that's inside of this gap. I like to reference these as fair value swing lows. They're inside of a fair value gap, and it's a swing low. That's why I call it a fair value swing low. Okay, after closing below this fair value swing low, I anticipate price to want to seek liquidity in that monthly area, which is here. And this monthly area is at the price of 98,000. It's from 95.5 to 98, give or take. Okay, and that's where we are right now. And this is what the chart looks like right now. Okay, so just to summarize, I am anticipating that if this continues, we could reach into 98, and we can potentially hold here as support. If we do, the bottom is in, and you're looking at 2 years of expansion. Otherwise, it can get ugly and reach into the yearly gap. Again, we need 2025 to close out, but ideally this would be the area, the line where we enter that gap at 74K, and that holds. And from there, you have an even greater reward because now your buy entry is down here, and you're looking at 2 years of expansion. That's the analysis for this video. If you have any friends or family who are concerned about the pullbacks, who are concerned about this bearish price action, they're hesitant, they're like, nah, man, you know, this is crazy. Why did it go from 124 down to 109? That's odd, man. Show them this video. Show them that this is normal, and tell them welcome to crypto. This is nothing compared to what happened just a few years ago. Stay safe, keep stacking, and I'll see you in the next video.